Rohit, you have a hold rating on Lyft, $20 price target. What's your reaction to the numbers?
This feels like a big reset quarter. One more reset quarter from coming from Lyft. There is more evidence that they are probably losing market share to Uber. They're lagging on recovery from West Coast exposure, and on top of it, there are kind of execution issues that they have their own insurance way of doing things, which is
Right.
probably exacerbating how things are being reported here.
Hey, Rohit, Dara Khosrowshahi, the Uber CEO, told Bloomberg 24 hours ago that he thinks Uber's taking market share from Lyft. Do you see the numbers as evidence of that?
Absolutely. Over the last 3 quarters, when we look at the mobility trends, what Uber is showing on a sequential growth, although the disclosures across both companies are highly inconsistent, so it's not apples to apples, it's probably apples to pineapples. But having said that, I think just the growth rate that these companies are putting up are diverging in a way that they weren't a while back. So I feel Uber is definitely gaining market share, and probably that share gain is accelerating as we speak.
So what do you want to hear from Lyft's leadership right now, Rohit?
I think the most important thing here is what is the path to sustainable cash flow generation. The company did put out a target with regards to how high of a cash flow generation that they can have. I feel given the guidance that they have of softer revenues and much softer EBITDA, I feel they just need to provide some confidence to the investors that, look, these are the steps we can take to get to a point that we can generate incremental cash, and then we can be investing for growth. I feel that confidence is completely lost after looking at the numbers today. There is definitely some noise and confusion, but I feel that's what we need to hear.
When that confidence is lost, do you have to change your rating? Do you have to change the whole position? Do you have to change the price target that is now well off that $20 you currently have at the moment?
What I will say is everybody on the street will revisit their financial models after earnings. So we are in the process of doing that.
Right.
And you'll hear more from us.
Rohit, we asked our audience on Twitter, does Lyft need to go outside of its existing lane, move into other areas to stay relevant? These are the conclusions. 57% of respondents saying no, stay in your lane. I ask you the same question. Does Lyft need to move into delivery?
That is going to be a very, very expensive value proposition. Right now, I think staying in their own lane, focusing on mobility and focusing on profitability, I think that's what is something that they need to focus on even more. That's expanding into lateral markets is just going to be more expensive. That is just going to push the cash flow generation point much more further down the road, and that's going to be hurtful to the stock even more.
Rohit, your industry colleague Tom White at D.A. Davidson told us 24 hours ago that the advantage Lyft has is its brand, its resonance with Gen Z. Can it leverage that to fight back against Uber?
So far, we are finding very limited evidence of the fact that they are able to leverage that brand. Yes, there is definitely a certain cohort of the population that prefers Lyft over Uber, but I think at the end of the day, ride sharing has very limited amount of loyalty to some extent. Both companies are trying to build loyalty around their subscription plans, but this is a very, very price sensitive product. So I feel regardless of affinity with a certain cohort of consumers, that affinity may not linger if the company has to change their value proposition, increase prices, and at the same time, Uber is improving their marketplace at a much more rapid clip. So they have market share to hold on to.
Yeah, I include myself, I love using the Lyft bikes, but they need some investment here in New York. There's been a lot of hand-wringing about it. I'm interested, therefore, as we point ourselves forwards, do you feel frustrated with management that they didn't guide you to this sort of a slowdown earlier when you see such a share price hit?
It's hard to have that level of visibility nowadays. Again, there are a lot of macro factors, there are micro factors, industry trends that make it even harder for management teams to to have that level of visibility under normal circumstances. There is nothing called as normal from a visibility standpoint nowadays. There are kind of driver trends. There is gas prices. There are reopening travel trends. Just the externalities just complicate their lives. But having said that, a little bit of consistency of or predictability in fundamentals is something that any investor appreciates. It may be lower, but still that's consistency is what we are looking for.